All right, we are live. Oh wow. Good morning, everybody. Just drop an emoji in the chat. Just let me know how you're feeling about crypto today.
I'm feeling pretty fucking good about crypto soon. I tell you fucking what. Hi, Caroline. Promise to be on my best behavior.
Wow. All right. This room is
You're in
getting.
hospital or morgue today.
Oh wow, man. We got over 300 on this call already. This is amazing. This is so good to see everyone. Hey, Jim.
Oh, this is going to be a dope call, guys.
This really is.
I'm going to show you some shit that'll melt your brains. Heavy testosterone there. Yep. Right down the hatch with a little scratch yesterday. So I woke up full as a ball.
All right. Wonderful. Crowds in. Text chat's working. Over to you, Scott.
Morning, everyone. It's my great pleasure to be here. For those of you who haven't been to one of these before, well, buckle the fuck up. This is the quiet before the storm. Altcoins right now, they look like the fattest pitch that you ever saw. And there's life-changing money on the line. Today, I'm going to show you 100% irrefutable proof that not only have we just started to run it back with the strongest, broadest rally in crypto history, but finally, at long last, retail is arriving. It's the exact same playbook as February 2024, which I also picked, and I called it on March 19th. So these are some tweets from my Twitter, calling it alt season starts today. You hate crypto now. I hate crypto now. Everyone's short. The bears were victory lapping. The influencers were in disgrace. I bought a pile of shit. I just grabbed my nuts in my hand and went, fuck it, we ball. And the last time I did this was February 26, 2024. And that was right here, right before we went ballistic. Did it again here before we went ballistic. And here we are right now. I just called it. We're a couple of days in and it's already working. It's going to make it 3 from 3. So let's look at what's happened in the real world since March 19th. So let's start with the majors. This is Bitcoin, Ethereum, Solana, DeFi, Chainlink, Jupiter, Aave, the 3 biggest DeFi coins. The established meme coins, Doge, Pepe, WIF, all going up. The cult meme coins, the shitters, Sigma, Retardio, Fartcoin, which we got in at 30 cents. We got in right here recently. Now, for something different, I just out of the blue, I wrote down the 3 very worst coins I know, the coins I hate the most, the coins that are absolute, there's no redeeming factors to them. Litecoin, Dev rugged it 2021. Kronos, they just minted 7 billion shares. They're a fucking scam. Way up. Bitcoin Satoshi Vision. This is the fork of Bitcoin that is not listed on any meaningful exchange, with the fake monopoly guy cosplaying, pretending to be Satoshi Nakamoto, the fake Toshi one. It's up big. So from layer 1s to layer 2s, from meme coins to dino coins, we have bottomed across the fucking board, ladies and gentlemen. And what traders haven't realized yet is that it's not just another Bitcoin first rally led by institutional flows, Michael Saylor and Trump affiliated grifters. If you haven't seen an alt season before, it's knocking farts. The last one, I ran a 10K account to 110K in a few months. Now, typically during an alt season, everything triples. And the bad quality, high beta, the trash coins, they can 10 to 50x. So what I want to do now is look at my watch list of trades back in February when I last called it. Let's just load up my February watch list. These are the trades I took in February. Some of these don't even exist. So let's look at February. SEI. PHB, remember this one? You know, from $1 to $4. Sui. February. Yeah, here we are. Near. Oh, remember my entry here. This is my entry. We got the big run here. AR, stupid scammy AR coin. Look at that. FET, another competing scammy AI coin. You can see that we didn't have many misses. It was like this one didn't do as well, but I love this coin and it did okay. Ina, where were we? No, that wasn't it. Oh yeah. No, this was a miss. No, this wasn't even out. CFX. You can see I moved my stop loss up to here, to here, to here, to here, to here. We got out, I think, a bit late about here. IMX, stupid coin. February. We wrote it. FIL. You can see what happened. You see a fucking theme, right? Like it's just shooting fish in a barrel when it's like this. Ondo, this was an unusual situation because we bought it like straight after launch. You couldn't bank on that again. Arkham. This was a good trade. I didn't trade Chainlink. I traded VRTX and we got in right here and we got out right here. Bing, 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 bing. Mines of Darwinia, it's been delisted. What a shit coin. Ape, we got in here and we got out of this dot here. CeeLo. You can see we rode the big rate right up. I don't know how much of that we caught. Yeah. Banging. And Ave, I didn't trade. It's just on my list for some reason. You can see that there's tremendous profits to make, like tremendous profits to make, but there's some obvious and some non-obvious problems. Problem number one, you will go crazy if you do it long enough. February was pretty fucking good for me. March I spent in Hokkaido, Japan, not looking at the markets at all, sitting in a Japanese onsen in the snow for like 3 hours a day. My brain was fried. I was crazed. Problem two is you're going to fuck it up. I didn't put this one on. Yeah, clearly I've messed it up. But the problem is you're going to fuck it up. Like you just know that you're going to fuck it up. And problem three is you don't have the time or the spare fucks. Like no one wants to actually trade. Like no one really does. You've got to be good at it. You've got to be watching this. You've got to be watching this like locked in a way that absolutely costs your sanity and mental health. You've got to be at the peak focus of a professional athlete. You can't do it at all times. You got to know when to hold them. You got to know when to fold them. You've got to be an expert. And the solution is pass the ball to me and David, who I'm going to introduce you to in a minute. It's an easy layup. Now, let's stick with me a little while I get a little bit nerdy and dirty for a minute. Now, I don't expect you to understand any of this stuff. It's going to be over quick, but there's a few nerds in the audience who need this. These are the strongest edges available to us as retail traders. There's plenty of edges, but most of the very best ones are competitive because good opportunities are also attractive to others. We don't want to be competing against market makers. We don't want to be competing against the best in the world. We want to find a venue that's a little quiet corner of the markets where we can win. Now, the first edge and what I'd call the meat and potatoes of what we do is a nerdy trade that I do everywhere that James taught me, that he does everywhere. We've done it everywhere from FTX to Hyperliquid to OX to every place you could imagine. It's called the stat arb carry factor. I'm going to show you how it works in a minute. I'll show you how to do it if you don't want me to do it for you. And number two is I recognize fake pumps by market makers and scam cabals, like the one that went on yesterday in Jelly. And I ride along. Because when people are manipulating a coin higher, I think most of the time they're gonna win doing it. The third thing that I do is I short new listings on shitcoins because on average, not always, but on average, they're going to zero. And these are three very simple things. Now, what I'd like you to notice about these is that these edges are so strong that I don't need to get the execution perfectly right. I could trade these three things with a fucking potato. I don't. Like we trade them with proper dashboards and spreadsheets. But you could, in theory, short new listings just by following the Twitter account for new listings on Hyperliquid and just seeing one and then just shorting it $1,000 each time. Like we do something more sophisticated, but you can do that. Now, here's the trick. Some coins pay you interest every 8 hours to take the trade long. Others pay you interest to go short. I'm going to show you Hyperliquid, and we're going to look at all the coins available on Hyperliquid, and we're going to sort them by 8-hour funding. So these are the coins that pay you right now to go long. And you'll notice they're kind of shitty coins. Move, FGT, that's the FTX exchange token, OM, Mavia, I made a lot out of that, Bera, VC Scam, Blast, whatever the hell this is. We can sort it the other way and say these are the coins that pay us to go short. Hyperliquid, NIL, CRV, Morpho, Ton. So what are the interest rates like? They're pretty huge. They're legitimately huge. So our profits in this trade come from two places. They come from both the money that we get paid. So for example, I'm long. Oh, Zeta has popped out of the list. That was in the list yesterday. So I'm in my personal account, I'm long this Zeta trade. And you can see it's only a $10,000 position. I've only made $344 from the profit, but I've made $448 from the funding in 2 days. So I made 5% in 2 days in funding. That doesn't sound sexy, but it adds up. And I've made extra money on the price movement. So if we break everything, if we break the funding payments, the funding rates down into 10 chunks, like we split all the coins up into 10 chunks, these are the coins that pay us a lot to go long. You can see that we've got, this is zero. So we've got the coins that pay us a lot to go long are statistically predictive to go down 2%, over 2% each day, and pay us a little bit of money for it. The coins that pay us a lot to go long pay us a lot to go long, and they're statistically about break even. Pay us a lot to go short. They're statistically about break even because they're trash coins. But overall, so we can, I pulled this up yesterday. These are the ones we were paid to go long. These are the ones we're paid to go short. It's a list. We averaged the list over 3 days because you don't want to be jumping in and out, in and out, in and out. What we can do, and why we call it a stat arb carry factor, which is the technical name for it, is that if you're going long a bunch of coins, you're taking market risk. You're taking the risk that Trump opens his mouth and the market shits the bed. If you're going short a bunch of coins, you're betting that the market goes down. But what if we melt up? What if it is an alt season? How do you do? How do you do it? You take a handful of dog shit that you go long, and you balance it out with a handful of dog shit that you go short. We're holding two hands of really the worst tokens in the world. Like if we look at these tokens, these aren't investment grade by any means at all. These ones aren't investment grade, well, except for hyperliquid, but that's a special situation I won't go into. And so what we're hoping is that our longs and our shorts balance it out and we just earn the fun. Now, the trick with that is that you don't want to do it with Bitcoin and Ethereum. It's very mediocre. It's a few percent a year at best. But way out into the trash coins, we can expect a much higher return. Why? Because shorting a trash coin that's going up requires some balls. Not many people would want to do it. It's a low capacity trade. There's a whole pile of things that suck about this trade. Those things that suck mean that most people will not do it. Most institutional traders will not do it. It's a thoroughly uncompetitive trade. And that's great. Because if a trade was operationally easy, it was simple to do, it was highly profitable, and then everyone would do it. And it would cease to be all those things very quickly. So by staying mostly balanced, we're avoiding taking market risk. So most amateur traders, the sort of trading that most of you have probably done, is like, these are the coins I like, fingers crossed they go up. And then the market goes down and you go, wah, wah. This is our real equity curve doing the stat arb factor on ox.fun, which unfortunately, I was going to do it on ox.fun for you, but the owner, Zusu, the 3 Iris Capital guy, proved himself to be a little bit of a weasel. And I'm still trading there, but I can't trust the guy. So I couldn't put your money in it. So this was our real equity curve on OX.fun. I mean, this was while the market was going down too. You know, you can see that it's not perfect. You still have down days, but you have a couple of down days. Now, the trick, the mathy bit, is that these coins that pay us a lot to go short, tomorrow they're probably going to be the same coins. That's really the whole game. And there's some math behind it. And this is what's called autocorrelation at an hourly rate. So how much the funding rate is correlated to the next hour's funding rate. And you can see up to, 100 hours or so, we've still got a pretty high correlation rate. So that's like 5 days. And we've got some degree of autocorrelation all the way out. What that means, if you don't speak nerd, is that you don't have to be jumping in and out of trades. Mostly, we're not doing what retail traders mostly do, which is I've got an entry technique and a setup and a stop loss and a target and all that stuff. We're just holding a portfolio of shit that pays. And we're adjusting that portfolio to keep the exposures that we want. This is closer to the professional version of trading that you do in a job. Now, if you don't speak nerd, let me translate. This means that a coin that pays you to hold it today is probably going to pay you to hold it tomorrow. The second thing we can do is short new meme coin listings. Since on average, these go down a lot. Like they go down, what was yesterday's? Look at a 5-minute chart from launch. You can see it was listed here at fucking 2.3 cents. Where is it? Where is it now? 1.7 cents. And that was just the one from yesterday. You can almost bet your ass that some coin called Jelly, when it's listed on an exchange, is listed there for the specific purpose of enabling some scamming insider to dump their bags on retail traders. I like to ride along that because that's a good trade. The third thing we can do is we can recognize pump and dump schemes and ride along. Now, like this one, I posted a few days on Rare, which is a dead project, hasn't posted in a long time. And I noticed some technical things and some open interest and premium build up and saw it was going to be a pump and we got in on it. It's what we do. Like when in crypto, you see crime and you rush towards it and you ride along with the crime. We are amoral to crypto crime because there's a lot of money in trading alongside crypto crime. Now, at this point, Ian, have we got David on the call?
Hey man, unfortunately, David's having some technical issues this morning, but hopefully he's going to be with us as soon as he can.
Okay, you let me know when he gets here.
Sure.
Okay, let me think about a recent pump and let me walk you through it. One second. What's this? Oh, Mavia. Hell yeah. All right. We rode the hell out of this. This was a coin. This is the long-term chart. And it was so greasy. You can see, you're like, great long-term chart. It's gone to zero, right? Like this is a worthless project. Let's zoom in the last week or so. And then I'll show you how we recognize the pump. Okay, let's get rid of funding rate. Let's leave premium. Open interest, and let's add aggregated spot tape is so the way that these pump and dump schemes work is Mavia was a 50 million market cap coin. No, actually it was a 20 million market cap coin that they ended up putting 27 million worth of perpetual futures to. Now, what this means is that the tail, the spot market should be the real price and the derivatives market should be the tail being wagged around by the spot price. But what happens here, if we look right before this pump kicked off, you can see the premium indicating a demand for leverage started to kick off around the same time as the spot tape became manipulated. So how you manipulate a spot tape is you find a very small instrument and you set the slippage to very wide and you run a market maker just open on one side. So it's only buying, it's never selling. So it basically means that you're spending money to stop the coin going down and making it go up. And this is very easy to do. Let's look at it on a 5-minute chart and we'll go back to where it happened. And what you see always before these kick off is you see an increase in open interest while the price is going down. So what this tells us is that as price is going down, someone is using that to build a big position. This is the number of trades taken part on the spot market in every 5 minutes. You can see when that spikes, you can see when this spikes here, the manipulation starts. This is them accumulating a position, and this is the manipulation really happening now. So you can see that they accumulated as from 15 million to 19 million. So they took a $2 million position, accumulated more here. So went from 16 to 22. So another $6 million of position, and then ran it the hell up. These are basically the type of scams that really greasy market makers like DWF Labs and really greasy market makers do. And if you can see it So let me show you something. I'm sorry. Okay, at the end of the pump, these two lines, the candles are the spot price. The red line is the perpetual futures price. In the chat, can anyone tell me why the perpetual futures line would be so much lower than the spot price here? Because they should be the same, right? Can anyone guess why they should be the same? Why they should be the same? Simon says closing positions. It's close. Usually a couple of hours to a couple of days on the pumps. No, it's not liquidations. This one was Bybit. We traded this on Bybit. So the trick is that the only thing that can make the perpetual futures go down while spot is going up is price insensitive dumping. And what that means is I'm just trying to get out. I know the gig is up. I'm just trying to get out as much as I can right now before the thing falls over. So when we see this is our clue to get out. So we see the signs of manipulation up that I saw you. We were in about here. We rode it to here, saw this. Out the day. They pumped it again, I think. No, they didn't. But here, from here to here is where we have edge. It's not the worst thing in the world to take a trade with no edge, but we really don't want to be part of it. Like we want to ride the times when we're not random guessing, when we're not taking a lot of chances. Yes, it is. And that's a complicated discussion. Sometimes it's a key for a short. Sometimes it depends how big the market maker bags are. Now, you probably didn't understand all that unless you speak nerd. But don't worry. You don't need to know anything or do anything. So I want to introduce the vault technology. So in previous alt seasons, you had to trade yourself manually. You had to get it all correct. Now, with smart contract innovation, you can just pool your funds with mine in a vault. So how it works is you deposit whatever funds you want to trade with. The vault automatically follows David and my trades. David does the night shift, I do the day shift. You get your share of the profits. If the vault holds 100 grand and you've got 10 grand, you get 10% of the profits. You can withdraw whenever you like. You can see it in real time going up or down. You see every single trade and how much profit it's in. This is better than copy trading because copy trading has a lag and these trades are instant. It's just a pooled set of funds that you're trading the same as my money. So you get the upside of all these advanced trades without doing any of the work yourself. How much is the least amount? $100, dude. Funds are secure. I can't withdraw the funds. Your funds are held by Hyperliquid. They're not held by me. No. We get 10%. You get 90%. Funds are secure, no withdrawal, not held by me or David or anyone else. Only you can withdraw your own money. Now, using the vault gets you all the expert trades I've shown you so far. Stat arb carry factors, shorting listings, writing scam pumps. You don't have to lift a finger. You just take your hands off the wheel and it gets you in on all the big moves from the upcoming alt season. We're going to punt some deltas here. And what does that mean for you? It means you can pay for vacations, business class flights, trips you've always wanted to take. Life-changing money, kids. Get crypto to pay all your bills for you, and it already does that for me. You can spend more time with family and hobbies and instead of spending hours researching, looking at this garbage, sending yourself insane like I am. There's no more stress of trying to pick coins, timing the exits, manually trying to follow my trades, all the stuff you've read about in my emails. Those trades are done for you and you just get the upside. And by the end of this big alt season push, you'll have a fat stack to put towards your retirement portfolio if that's something you want. So having guys like me and David trade for you inside the vault, how much is that worth? If you tried to get hedge fund managers some of whom really suck, but most of whom are pretty good. The entry fee, it's not 150 grand. You get a shit hedge fund manager for that. Well, the hedge funds I'm invested with, they have 150 grand minimums. We get $100 minimum or something like that. The vault isn't even going to be a tenth of that, or even 100th. Today, you can get the Memecoin Millionaire training and vault access. So what that is a total, complete nerd mathematical exposition of everything that we're doing, and vault access for just a one-time payment of $197 for the launch. It's going up to $500 after the launch. You can put as much money as you want. It's 100% automated from your point of view. It's not, it's David and I clicking buttons like Muppets. You get to the same results of us without doing any work or knowing any shit. All of the expert trades you've heard me talk about, but you're too scared to do on your own, the vault automates that for you and just gets you the results. This is when you want to get in, because if you miss the timing, you're going to kick yourself. What does it cost? It costs 10% fees on profits. So you get 90%, we get 10. There's a 1-day lockup. That's from Hyperliquid, not us. And what that is to stop you trying to be an idiot and watching it all day and saying, I'm going to pull it out, put it back in, pull it out. If you do that, you're going to fuck it up. So don't do that. Leave it in or pull it out, Yeah. And you can deposit crypto for it. It's 1-day lockup. You get David's training, vault access, and our bonus training on the dirty carry system, which is the basis of it. You get my personal 90-day guarantee, and for those of you who know me, there's no fine print, no funny bullshit with it. You don't have to give a reason, any reason or no reason at all. You just want your money back and you get it. I called the old season bull run last March. I've called it in previous bull runs. The guys who followed my calls all made a boatload of money. The beating heart of crypto has always been, wait for the little guy to catch up. I caught up with crypto. I was way behind. It's on the bones of my ass at one stage. Now, I want you to be able to, what I want for you is what I want for myself. I want you to be able to do whatever you want, wherever you want, with whoever you want, for as long as you want. Have no one tell you what to do. I think it's up 18% for the month.
I think it's up a little bit higher than that. Let me check though. We've gotten some early depositors already, so it's hard to tell. Also, apologies for the late join. Kat decided it was a great time to take my phone off the charger, so my alarm didn't go off.
How you doing, brother?
Doing all right. How are you doing, Scott?
Guys, I want to meet my great friend. Been trading with David for a long while. He taught me a lot of this stuff, actually. I'm just going to finish the pitch here, and then I'm going to let David geek out and show you some of the trades that he's been doing and some of the results that he's been getting. And you'll see he's a pretty impressive guy with fucking incredible hair. Right along. The vault is the fastest path towards that because you're handing the ball over to guys like me and David. You can use in the UK. Everyone can join. It's using Hyperliquid Exchange, which is the fastest growing exchange in the world. And it's my favorite exchange by far. The biggest alt season bull run is right in front of your nose. He got all my hair indeed. It's like all the previous bull runs I've predicted. This time, you don't even need to follow my call. You don't even need to trade me. You get absolute full transparency on the blockchain. I took these screenshots yesterday. You can see that we've just been fucking around before we launched it for 29 days. We put in 11 grand. We got $783 profit. And everyone who's in, you can see their wallet. You can see their wallets, everything. You can see everyone's made a profit except for this guy for some reason. Because he was.
I think he joined right before we rebalanced, so he just caught some of the fees and hasn't had time to make money. He should be in the green right now.
Yeah. Okay, so you don't need to wait for someone to update a spreadsheet. You don't wait for someone to trust. You don't need to trust me. It's all on the blockchain. So are you going to miss out on all the wealth that's about to flow from the crypto markets? Again, we are capacity limited with this. What do you reckon we can run while still maintaining peak performance, David, here?
So I mean, we won't know the full limit until we kind of start bumping up against it. Like when our capacity, so when we start, basically once we start taking on money, and then that money stops working as well for us.
So yeah,
right?
but I mean,
Well,
ballpark. Come on.
but yeah. So that's going to vary throughout time. Right now, I would say 1 million is probably a good mark. It'll probably be closer to like 750 right
Right now.
now.
But if we
And
get
that,
an
and
alt, if we get an alt season, the market's probably going to triple. So we probably got 2 or 3 mil in that.
right,
So
exactly.
right now, today, I'd probably close new entries when we hit about 700 grand.
Okay.
I think our North Star on this has to be that we want everyone to do great.
Yeah. Well, so
So
a lot of it will be like so a lot of these coins, the strategy we're doing is we're collecting this funding rate, right, which gives us an edge on any trade that we're taking, right, regardless of what the market does. And we're trying to balance these positions against each other. But a lot of these high funding rate coins, they have low open interest compared to a lot of the rest of the market, or low volume or lower liquidity or stuff like that. So that's really kind of the limiting factor, right?
so let me give you
So
an example of
if
that.
we want
I took one of these the other day, Zeta, which was a high funding rate coin. I got to get out of this one today. Can you post the link, please, Ian, in the chat? So the link is posted in the chat now. Now, I posted this now, even though price went down, because I've been paid so much in funding on my $10,000 position that I took in my personal account, I've made $448 in funding and $222 in profit. So most of these trades are like this. You make a little bit of profit from the coin moving, but you make most of it on the other stuff. Yes, you can use funds in Hyperliquid. Ian, can you post that in the chat, please?
I'm
And
sorry, Scott. Is it the Hyperliquid link or the checkout link?
the checkout link, please.
Sorry.
HTTPS, finrev.ai, memecoin special. So while we're doing that, I'm going to hand it over to David. And David, why don't you walk us through some sort of scam pump or dump or something that's interesting for these guys to see? Have you got a laptop you can share screen?
Yeah, I have. Give me just one moment here. Let me pull it up. I should have been better prepared for this, but here we are. Let me separate this window. And it would be great. No, kitty. Sorry, cat's trying to come in and run all over my place. There we go. Alrighty. And then let's take a look at Barra, because that's probably my favorite trade that we've got on. And we've been on this one for a little bit now. Let me share my screen so you can see what we're talking about. And there we are. Can you see it?
Ian, do you want to post a crypto wallet if anyone wants to pay in crypto?
Okay.
If anyone wants to pay in crypto, just message Ian. And Ian, if you want me to give you a crypto wallet, I can give you one.
Okay. Let me just check with the back end a minute.
USDC is perfect, guys. Just message Ian if you want to pay in crypto, and he'll do the necessary. Okay, I'm David.
Yeah. So starting off, I think I already mentioned it briefly, but our goal is to balance positions against each other. So we have long and short positions. The goal is to have, so if we have a $500 long position, we want a $500 short position somewhere else. And the reason for that is because on average, we expect those fluctuations to sort of cancel each other out. So it's like, okay, if the whole market's going up, then sure, we're going to lose money on our short position, but we're going to make money on our long position. And by spreading our positions out over 10, 15, 20 trades, but keeping our portfolio balanced, the goal is to keep a very stable, smooth, steady performance going. But the cool thing that happens is because we have sort of this edge on every position that we have, the edge being that we're getting paid funding, we expect to make money over time. And because we're buying coins when they're paying a shitload of money to get long, and we're selling them when they're paying us a shitload of money to get short, those are much more likely to be sort of self-fulfilling prophecies, right? Because if we're buying something and we're getting paid to buy it, that means anybody else who buys it is also getting paid to buy it. That makes it a very attractive buy for other people, not just us, right? And so what happens is when that happens, price ends up going up, right? Now that doesn't always happen. Sometimes, the coin is just shitty enough that people are willing to pay a lot to be short it, and longs, sometimes won't always make all of their money back from doing that. But Barra here is a really, really good example of, we bought this coin not because we were betting on it going up. I'm on the hourly chart. Let's switch it out to the daily chart. Right. So this coin right here, I don't know if anybody was paying attention at launch. Everybody's going, oh, it's Barra. It's, it launched at way too high of a value. Either the coin's got to go down or whatever. So everybody wanted to be short. And so they're paying us. This was a lot higher, but they're paying us currently around like 85% a year just to hold a long position on it. Right. Which means that this coin would have to drop something like 55% over the course of a year and we'd still break even. That math isn't exactly correct. But what's happened is because it's been so attractive to long it that we've actually gotten a lot of performance out of it. And we initially started buying it down here. But, as people deposited in the vault, I had to rebalance the positions, add more to it. But our position on Bear, as you can see, we made $1,000 here off of what's now a $5,000 position. It was a lot smaller. I think we started off with like a $2,000 position. And we made $120 in funding. Right. And so the funding is the goal of what we're trying to collect because we didn't
But you
necessarily
can
know
see that
that
we're funding positive on all of these trades. So we're not. So
Yeah,
we're
yeah, exactly.
always collecting interest. We're like loan sharking. The effective thing that we're doing here is we're loan sharking to people who are so horny for leverage on the other side that they want that they want leverage and they're willing to pay for it.
Exactly. So this is where we can count on, like, because we can look at the funding rate and we go and look at the average funding rates and find the best ones that are going to stay consistent. So we go look at those. So we have some tools and stuff on our back end that we use to look at that. And so we find all these coins that are paying people to either be long or to be short. And these are the positions we take. So this is our edge right here, right? And so you can see, we have negative P&L, we have positive P&L, we have negative P&L, we have positive P&L, and so it scrolls through, and these roughly balance each other out. But then you throw these on top, and that's where our performance comes from, right? And what's cool about it is as these positions go up, right, this ends up being a larger chunk of our portfolio than we want it to be because we made too much fucking money on it, which is a great problem to have. And then we get to start taking some of the profit off of it, right? Because we go, okay, we don't want to be long $10,000 worth of something. Let's say it doubled. We only want to be long $5,000. Well, great. We'll take our $5,000 extra that we made, cut it and run, redistribute it out so the portfolio is nice and balanced again, right? Because again, we're not trying to take directional exposure, and we get to keep all this plus the funding here, plus this position here isn't the offsetting position hasn't lost us more than what we made. So looking at funding like this, it actually gives us the chance to catch a lot of these sort of unexpected pumps or dumps on something that's paying a lot to be short. Right now, most of the stuff that's paying a ton is actually on the long side because people are skittish and want to be short the market right now. And they're willing to pay us because they need counterparties, right? So if somebody wants to short and sell the market because, let's be honest, the market's looked kind of sketchy for a while. People are like, okay, well, I want to short stuff. As soon as they start shorting and driving the professional future price down, they start to have to pay to hold that short position. And they're sending out an offer to the market saying, I will pay anybody who will take the other side of this trade. Right. So we get to take advantage of a couple things. First of all, most people on average who try to trade don't do very well. And so taking the other side of their trades is usually a pretty good idea. On average. Obviously, there are exceptions. There are people who beat the market, but on average, if the market is it's this funding rate, the more extreme it gets, like the more somebody is willing to pay you to be long or pay you to be short, the more likely it is that you're short or long, where you're opposing that person is going to be a good trade, right? So you combine that in the fact that we're getting paid just to hold exposure, which we can balance out with other exposures, right? So we can hold a roughly flat exposure on the portfolio level. And you balance that with the fact that, okay, we're getting paid just to hold these positions. That's free money right there. Then you combine the sort of the factor that usually the people who are paying to hold positions are wrong. And all of a sudden we've got a system that pays off pretty well. So let's see. Do we have some questions in chat, or did we lose Scott? What happened here?
think I think we're pretty good. Like, Lauren Cunningham, can you shoot a message to support@scottphillipstrading.com and I'll get someone to get back to you today. Yeah, there's going to be a lot of emails coming in right now. You guys can definitely pay in crypto, just chill. Got no problem with that. The way that you deposit to Hyperliquid is we've got a bunch of videos showing you exactly how to do it, but the short version is you're depositing USDC, which is a stable coin. That's what Hyperliquid accepts for deposits. We show you how to get whatever crypto you have now into USDC, and you can get it from your exchange straight out, spit it out. But that's a bunch of technical bullshit that no one's got time for here.
We just got an interesting question, actually. Somebody asked about how we felt about hype after the jelly debacle thing that happened yesterday.
How do you feel about it? Because you might be different than me, because I know the owner and I've got a very large position in hype. So let's hear you first.
Yeah. So so for those of you that don't know what happened, basically there was somebody who came in and tried to accumulate a very, very large position on this very thinly traded, like illiquid shitcoin called Jelly. And the goal of this person was they wanted to have offsetting positions in different places and then dump that position onto the Hyperliquid liquidator. Like they wanted to intentionally liquidate themselves and make Hyperliquid deal with the problem because they knew they weren't going to get out of their position at a good price. All right. So they wanted to win on one side and then let the losses just get shoved off on Hyperliquid.
Which is something that we've done ourselves on that particular exchange. I mean, we're condemning their gangster tactics, but we've actually done exactly the same sort of predatory bullshit ourselves.
Yeah, this is sort of like an area where it's like it's just a trade. People talking about it like it's an exploit. It's like, well, no, this is the program the way it was designed, right? Now, what happened yesterday is Hyperliquid had to step in. There was a similar attack on Hyperliquid, a couple weeks ago, last week, something like that. It's hard to keep track of time in crypto. But Hyperliquid adjusted a bunch of their security parameters and stuff to try to make stuff like that not happen. Hyperliquid ended up taking over the position, and they had to settle the position. They decided I'm not going to go into the whole process of what they did there. Basically, Hyperliquid didn't really lose too much out of the scenario, but they could have if they made worse decisions, right? So they handled the situation well, but they need a way to automate that right now. Is sort of the state that they're in.
They fucked the exploiter, and the exploiter was definitely someone affiliated with Binance, OKX, and BitGet exchanges. So what it was really was an attack by centralized exchanges on Hyperliquid, because immediately after it went on, all three of the centralized exchanges started tweeting about how bad it was and so they're scared is my take on it. It was a purposeful attack from CZ, from Binance, trying to blow up a competitor, because he blew up FTX. That was him. Yep. And he is a ruthless motherfucker. And he came at Jeff, who's a mate of mine who built Hyperliquid, and he missed. He came and he missed.
Yep. The advantage of what we're kind of doing here is we actually got to catch the hype on a short. Now, we were already short hype because it's already paying us to be short, right? People want to be long it. And it's kind of just been floating around. It hasn't really been making or losing money. We're just kind of collecting that funding. So it's been bouncing around a little bit. But it was drifting a little bit up. But this payment that we're getting for essentially in that trade, what we're doing is, since we're willing to be shorted and we're gradually losing some money by being shorted, right? It's paying us to be short, but on net, it's losing us a little bit of money. But the advantage of having that in our portfolio is, first of all, it balances out our long exposures, right? So that our long exposures, like the bear that I showed you, is making a shitload of money. Well, the short's only losing a little bit of money, right? So that's kind of the goal of what we're doing here. But especially on the short side, because the reason we're getting paid is because so many people want to be long this thing, we get to kind of take that risk. Or hedge ourselves against that risk using something like this hype short. And so we were in drawdown on hype, I think like $600 or something like that, over because we've been holding that position for 4 weeks or something like that. It's been a while. And that nuke just kind of reset us back to zero. Back like it was our position went briefly in the green. Now we didn't take profit on that because again, our system is we're supposed to stay short on hype. It's a very good thing for us to be short because it's paying us gradually and it's not like spiking against us, right? Like it's not costing us a lot of money. It's actually helping us because it's offsetting our long positions. And then it just gives us the opportunity to grab sort of these idiosyncratic events that pop off where somebody's like, oh, I'm going to go attack Hyperliquid. Okay, cool. We'll take the money, you know? Um, and that's kind of one of the benefits we get out of running this strategy is having these little exposures that other people don't want to have to a whole bunch of stuff. Because like you saw, like I have a whole bunch of positions open on there. And again, generally the positions that other people are scared to have are the ones that we want to keep, are the ones that we get paid for. So
You can add money at any time. You can remove money at any time. It takes 24 hours to get your money back, and that's Hyperliquid. It's not us. It's only to stop you trying to get cute and going, oh, it's made so much money. I'm gonna pull some out and then put it back in, and I'm gonna get cute. No one ever makes money doing that. So don't be a dick. Don't be a dick for a tick.
Yep, that's the strategy we use on the vault too. It's like usually the more you touch something, the harder it is to make money with that something.
Every time you touch these are very small trades. Every time you touch them, you lose money. So every time David adjusts one of these trades, we're probably losing 7 hours of funding.
Something like that, yeah. Yeah. So if you guys see, if you guys go look at the P&L curve, you can actually see when I've adjusted positions because we incur position costs, right? It costs money to trade. So somebody asked if our money compounds if we leave it in. Yes, it does. Yes. But yeah, so you can actually see on the P&L chart, it's like, oh, if it was kind of just floating up and then it went down by, 45, $50, well, I probably just rebalanced a bunch of the trades, right? Because it does carry a cost every time that we want to fuck with something. And that's for a variety of reasons. First of all, the exchange charges a fee, like you get charged trading fees, but also when you're taking comparatively large positions on very illiquid things, you have to worry about slippage. You have to worry about
Market impact.
Right, market impact. Like, is the market going to run away from us as soon as we start trying to take these positions? And so those costs kind of add up. So the goal is to trade as little as possible. If you do it right the first time, you don't have to do it again. And that's the goal, right? So we find a position that we're like, okay, this has the qualities we're looking for, right? It means it's going to pay us to get long. It's going to pay us consistently for quite some time. And again, we do some statistical analysis on the backside to make sure that we have a good expectation of that being true. And say, okay, this thing's going to keep paying us if we stay long. We expect that to go on for a long time. Then we get long and we don't touch it. We just let it pay us, right? And the only time we really have to touch it is when we, for example, if for example, over the last day or so, we've gotten a lot of people depositing into the vault, which is awesome. Obviously, now I have to go put that money to work, right? So that's a time when I have to touch it, when I have to add more positions on, or if eventually, in the example I was talking about, the thing that's paying us to be long, if eventually the market flips and says, okay, yeah, we're not going to pay you anymore to be long that, then of course we go, okay, well, then we don't want to hold this thing anymore.
Hey, can I stop you there, David? I want to show you a trade that I'm in right now, which is on the borderline of me having to get out of it. So I'm long Zeta. I've been long for a couple of days. I got 5% in funding. It's about break even on the thing. Would you stay or would you go
now? Right now, so we are actually in that trade in the vault as well.
Yes.
Right. And we
are. It's the best trade. It was the best trade.
It was the best trade. Yep. And as of right now, all right. So I actually woke up and I got right on this call. So let me take a look at let's look at the back end stuff here real quick. Just refresh this data set. Blah blah blah. Okay.
Yes, comfortable showing your back end dashboards, or are they not? Are they not for public consumption?
Beg your pardon?
Are you comfortable showing your back end dashboards, or are they not for public consumption?
No, it's gross right now. So I'm in the middle of building out a nice, pretty thing, but right now it's just a CLI tool. So Zeta right now is not paying nearly as much as it was, right? And so there are actually better options, better things for us to be getting long instead of Zeta. Right now we are up $350 on Zeta and another 15 in funding, right? It's still paying like 30% a year. And that's pretty good, but it's not anything close to the like what was it like 400% it was paying a couple days ago.
Yeah.
So this would be an example of a trade that's more or less played out, right? And if you go look at the chart, am I still sharing my screen? I don't think I am.
No, I am. You can you share your screen, but that's my take. This is a trade that's played out, and we're just looking at the trades.
Yeah, I would kind of agree with that. There we go. Now I'm sharing. Okay. But as you can see, we bought this on the back of a short squeeze here, and that was looking to continue going. As you can see, it did kind of keep squeezing up there, and it's still paying people to be long, right? So it's not a bad trade at the moment. So now we have a decision to do we wait for it to start retracing, or do we, because again, trading costs money. And if I want to close this position, I have to close this position, and then I have to go open another position, right? So will that cost be worth me switching to something else that's paying a little bit more? And the answer is right now, I don't think so just at this moment, but by the end of tonight, I think that will probably be correct.
Yeah,
right. So over the next few hours, we'll be gradually working out of this position and working into something that's willing to pay us a little bit more.
Okay,
right?
so let's talk about working out of the position. The way that most amateurs would work out of a position is by going to the exchange and going, I want to sell, either market or exchange on limit. That's not such a great idea. When you're rebalancing exposures, you want to be very calm and gentle. And the way that James, our other trader, says it's like making love to a beautiful woman. You want to do it slow.
Great analogy.
You want to do it slow.
Yep. If you just go try to ram it in there, nobody's going to have a good time. You got to ask her nicely. Maybe take her out to dinner first, and probably in the opposite order. But but yeah. So the so what that actually looks like in practice is what we're going to do is we're going to have some limit orders, and we're going to place them close to the top of the book, right? So because we're paying 3.5 times as much in trading costs if we were to use a market order, right? Plus, as you can see, right now the spread, it says it's bouncing. It's like at 0.075%, 0.0. It's bouncing around. But if we have to, so if the real price is in the middle of these two prices, right? And we have to pay extra money just to get immediate liquidity, like to immediately close our position. And we have to get slightly bad prices because we have to pay this spread cost, like the difference between the best bid and the best offer. That adds up, right? So we don't want to pay this cost. That's avoidable. We can just be on the best offer in this case because we want to sell. But we need to be careful because if we put a whole big order here and then all of a sudden other people start seeing it and going like, oh shit, well, I don't want to feel that. If he's selling, I want to sell first. Right? That's the thing.
Okay, so this is a key concept.
Yes.
If people get the idea that David knows something we don't, like he wants to sell, fuck, he wants to sell. I want to sell too. Fuck, what the fuck does he want? He's a good trader.
I don't want other people beating me to it, right? Because they're going to push the price down, even if it's only a little bit. They're going to push the price down, and I don't like that, right?
And
I want
this
to
is
get
what
the
we
best
call being a dick for a tick. Trying to get cute and save that one tick, and you fuck yourself because you've pushed everything around and changed the game, and you sit there and it takes you 10 minutes to get filled after that, and you're going, I was a dick for a tick. I was a dick for a tick the other day on Fartcoin. I missed it.
Yep. So if you can't tell, you can see like right here the different buy points, right? And there's a reason why these are all at different prices, right? They're not very different prices, but they are slightly different prices, and that's because we're breaking the order up into small chunks. We're putting that order in this case, these were buys, so they would be on the bids. But to close it, we're going to put a small order on the ask, right? That way it's not big enough to scare anybody. It's not going to worry anybody. Nobody's going to go like, oh shit, this guy knows something, because there's just like, oh, it's $200. What can he really know, right? But then as soon as that gets filled, then we're going to put another $200 there, and then another $200 there, and then another $200 there, and we're just going to gradually work our way out of the position and let the market do the work for us, right? So as you can see, it's bouncing around a little bit, and we don't want to give it a push in any one direction. So in order to get out of this position, we place a limit order for maybe a fifth or a tenth of the position, and then we just refill it. right? Once that gets tagged, we just refill it. And we actually have, I use a trading tool called In Silico Terminal, which has the ability to make sure that our order is always on the top of the book. So if this price changes right here, like if this changes, if it changes up, that means we got filled. Great. But if it changes down, then the program I'm using, it'll actually go, oh, it changed down. Let me join, let me move this order from here and move it down. Right. That way I'm always going to be the first one to get, if somebody comes along to buy, my order will be very close to the first ones to get filled. And we do this in small chunks. That way nobody knows that we're doing it unless they're really, really specifically paying attention to us. Like, because it's all on chain, you would be able to figure that out, but not until after the fact. And at that point, we don't give a shit. We already got a position or got out of our position or whatever it was we were trying to do. So that's kind of the process we take for getting in and out of the market, because it reduces the, again, if we're getting paid. Zeta just flipped positive, actually. Holy shit.
No, I want to be out if it flips positive.
Right.
Because the premium flip positive, but the aggregated funding is still negative.
Right.
What's the hyperliquid funding here?
Funding just flipped positive. Of course, it is on the hour, so it may normalize a little bit. But
it's got 59 minutes to go. If we're not out, if it's still positive in 1 hour,
we'll be getting out.
I'm gonna GTFO
out.
on my position.
Yep. Exactly.
So here's something that I'd like you all to understand, guys. Most of you overcomplicate your trading. Most of you have these entries, text exits, complicated plans, trailing stops, all this bullshit. You want to put a trade on when you've got an edge, when you have a statistically better than even chance after costs of making money. And you want to take the trade off when that edge no longer exists, when you're just a noise trader. That's what trading is. It's not.
You can think about it like this, Scott. If I had a quarter and I said, hey, let's play a game. If it's heads, I pay you $1, and if it's tails, you pay me 50 cents. How many times are you flipping that quarter?
Yeah.
Like, you're going to flip that quarter until you can't anymore, right? Like 1,000,000 times. You're just going to keep doing it. You're going to keep flipping that quarter.
I have a question for you, David. Suppose I offer you one flip, $1 million, or no, let's say your net worth, but your entire net worth, $1 million, you've got a 60-40 chance on one flip. Do you take that?
Do I take that?
You've got edge. You've got all the edge in the world, but you can't take it. Like, it's not responsible to take it.
Right. Well, so that is true, and this is where we. I don't know if you guys have ever heard of this concept. I know Scott has. Of Kelly, and Kelly is a mathematician who came up with this formula that explains exactly how much you should bet on something if you know what the probabilities and payoff are. Right. Apparently, I am having camera issues. What is going on here? Am I back? I don't know. Anyways, can you guys still hear me?
Yeah.
Yeah, we can hear you, but your screen is blank at the moment, David. It could just be top share refresh or.
Yeah. Give me just 1 second. I'll be right back, guys. I'm so sorry.
Yeah, sure. So I'll just do a couple of boring bits if that's okay, Scott.
Guys, I think we've done enough nerd stuff. We've taken enough of everyone's time. Like why don't you take control back? Put your camera on. Do the nerd necessary. We're still short on hype since yesterday's shit show. Actually, I'm long. David's short. You're short hype, right, David? David, you were short hype during the shit show.
Yes. Yep.
Yeah. So he made money. I lost money, but no crying in the casino.
Yep. Well, that's what happens too, and that's why I kind of illustrated the point of like the flipping quarters. It's like, because it doesn't matter when you're trading. It really doesn't matter about the outcome of any individual trade. If you're doing it right, one trade's outcome by itself, it doesn't actually matter, right? Because it's like the flipping the quarter. Like if I told Scott I'm going to pay him $1 every time he flips the quarter, and he only has to pay me 50 cents if he loses, he's going to flip the quarter as fast as he can. And he doesn't care if he gets a tails and he has to pay me 50 cents. It doesn't matter, right? Because what's happening is every time he flips that quarter, he has an expectation that the average value of that quarter flip is going to be in his favor. He's going to make money on average, right? he either loses 50 cents or he makes $1. There's a 50-50 shot of him losing 50 cents, right? Which means the value of a loss for every flip is minus 25 cents, and the value of a win is positive 50 cents for him. You add those two together, he has an expectation of making 25 cents on average every time he flips that quarter, right? So he's just going to keep fucking doing it.
Let's call it that. We're rabbiting on. We're going over the same concepts. Let's hand it over to Ian. He's got some nerd stuff. Guys, this is a fucking great product. This is something that you all should be fucking doing. It's really fucking good. It's something that we've been working towards for years. Finally, we can do it. The technology's here now. It wasn't before. Before it was some copy trade, stupid ass bullshit. This is the future, guys.
Nice. All right. Thank you so much for that. So, I mean, my take is I look at David and I'm like, this dude's going to go and work now and make me money whilst I do nothing. I mean, that's the way I look at this product. Hallelujah. Thank you, David. So, what
job?
there's been a real frenzy for this product. Okay. So, when you go through and purchase it, it could take up to 10 minutes to get your welcome email. It's probably going to be a lot quicker than that. So be patient for that. As soon as you receive your welcome email, there'll be the joining instructions that will send you to our mighty networks, to the Memecoin Millionaire group. In there, there'll be the complete A to Z, soup to nuts instructions if you don't yet have a MetaMask wallet set up and you're not connected to Hyperliquid. If you are connected to Hyperliquid, boom, you're done. We'll give you the details. You already got your MetaMask. This is literally a 30-second connection job. In there as well, there is a detailed video from David that goes through step by step this entire process as well. So you can keep absorbing yourself in it. But I mean, really, like, you know, my level is this much compared to their levels, and that's what I love about being here, because there's clever people doing clever stuff consistently every day. And like I said, this is me. My day's over now. You go pump that vault, David.
All right, guys.
No.
This $197 offer is open for, where are we closing it? Like, it's supposed to be 5 days, but I'll leave it open for a week. Because I don't care. We're gonna have to close it when it hits about 700 grand. So as it gets close to that, I may pull it earlier. Like we want to have a big margin for error.
We can send out some emails letting people know, like, if they forgot about
Oh,
it.
believe me, I'll send some fucking emails, bro. You've got no fucking idea. I'll fucking
This is true.
email.
Scott sends me a ton of emails. Scott loves.
All right, guys. Thank you
then.
so much for your time. Thank you so much for your attention. This is a great thing. You should buy it. You should do this. Let's fucking go.
Let's do it.
All right. Well, thanks for joining, everybody, and I'll see you later.